For instance, a month ago, Nvidia was trading at $134 per share. I believe it has dropped by about 25% to almost $100 per share. However, I believe that in terms of mood, you will see that Nvidia will report in roughly 3 weeks, and I believe that it will cost less than $10. Get your Nvidia keychain quickly since the first 100 purchases will receive a huge discount. Since demand is still higher than supply by all measures, that will be very beneficial. Yes, I am aware that's the other crucial question, John. Though attitude has obviously changed, I don't think the fundamentals have altered all that much. Someone has been frightened. The Fed will begin cutting in a month, and after that, there will likely be 2 more. As a result, I believe the Fed has enough ammunition to prevent a catastrophic recession. It was over $3 trillion, but it might theoretically be less than $2 trillion at some point. Yes, well, and keep in mind that Nvidia's growth matched the increase in profits. They're profitable, you know. What is this, the multi? What does it do while it's down? It's down 32, and I assume that during the past week, we've talked to investors, and some of them have said things like, you see potentially what's happening in the market, people sniffing out this pullback. The stock that they made the most money on was Nvidia. That's where you make money. Let's avoid ruining the year now. I had a great year. Let's remove some funds from the cloud table. Actually, you might divide it into 3 categories. Nvidia's AI, which powers the models themselves, is the first. That is the first thing you need, and it is the first thing that needs to be done. That will not go away. The second section then discusses smartphones, followed by PCs. We have a lot more optimism in AI and cell phones. The stock price of Nvidia, the computer giant leading the way in artificial intelligence, has skyrocketed in recent years. Economic indicators are vital in determining investor sentiment and stock price fluctuations, even though the company's technological innovations are a significant component in its valuation. Nvidia and the economy at large have a complex relationship, with a number of important economic issues having a big influence on the company's performance, and in turn, its market value. Let's start by talking about global economic growth. Generally speaking, a strong global economy raises demand for semiconductors, such as Nvidia's GPUs. Data centers, game consoles, and increasingly AI applications depend on these chips for power. The demand for the technology that Nvidia offers rises in tandem with the expansion of economies and sectors. The company's revenue growth and stock performance are directly impacted by this demand, which is fueled by economic success. Another important component of Nvidia's economic equation is consumer spending. The demand for gaming GPUs, a major source of income for the corporation, is directly influenced by consumer confidence and levels of discretionary cash. The demand for Nvidia's state-of-the-art GPUs is fueled by consumers' propensity to purchase expensive gaming systems and other tech-driven goods when they have more money to spend. This correlation between Nvidia's financial performance and customer behavior highlights the company's strong ties to the larger economy. Another important factor in Nvidia's development is corporate investment. The demand for Nvidia's high-performance computing solutions is driven by businesses' capital spending plans, especially in the areas of technology and data centers. Nvidia stands to gain from this increase in corporate spending as businesses spend more and more to upgrade their technology infrastructure in order to remain competitive. This business dependence on cutting-edge technology strengthens Nvidia's standing as a vital participant in the world economy. Therefore, the situation that most of those had in common was that they all had significant gaps and dips in volume. Thus, the market has been poor for 2, 3, and 4 weeks, followed by news-related earnings gaps and losses. That occurred at Microsoft, Amazon, and, well, a few other places. We'll see what happens with Nvidia. However, at this point, you don't get out of it or recover from it soon due to the severe nature of that selling, the aggressive and what you would call distribution. That's the word when you drop and gap, and the volume's 4- and 5-fold. Therefore, interest rates are another important aspect that affects the price of Nvidia's stock if and when things do work lower and the tiny caps have given back all their gains. The mood of the market as a whole and investor interest in growth stocks like Nvidia may be impacted by rising interest rates. Increased borrowing costs due to higher interest rates have the potential to slow down economic growth and lower demand for Nvidia's products. When interest rates rise, investors typically become more cautious, which causes Nvidia's stock price to fluctuate more as the market reevaluates the company's growth potential. For Nvidia, the current state of the economy has brought both opportunities and challenges. Although the world economy has shown resilient in the face of numerous challenges, concerns have been brought about by elements like inflation, supply chain interruptions, and geopolitical conflicts. The semiconductor industry as a whole has been affected by high rates of inflation and continuous supply chain difficulties. But these difficulties have been somewhat lessened by Nvidia's dominant market position and pricing strength, which has helped the business get through these difficult times more skillfully. From an opportunity perspective, Nvidia has benefited greatly from the AI explosion. The demand for Nvidia's GPUs has remained strong as businesses from a variety of industries make significant investments in AI technologies. Since Nvidia's technology is crucial for training big language models and enabling a variety of AI applications, the industry's rapid growth continues to offer prospects for the company. Despite more general economic difficulties, Nvidia's growth pace has been maintained in large part by this AI-driven demand. Nvidia's stock price and economic indicators have a complicated and nuanced relationship. According to historical data, Nvidia's stock has frequently outperformed the overall market during times of economic boom, indicating the high demand for its products in a developing economy. Indeed, I would say that Nvidia's stock has underperformed the majority of other semiconductor firms that are exposed to data center AI, as it has declined by almost 30% since its June peak. The truth is that, despite the recent company-related worries, the Blackwell delay, and the macro-related worries, we still anticipate Nvidia to lead the data center XPU market. Additionally, we observe that in-house XPUs are performing well as well. For example, businesses such as Amazon, Google, and others are creating their own in-house XPUs. We anticipate that Nvidia will continue to dominate a market that is expanding really quickly, even if we also see competitors to Nvidia GPUs, such as AMD's GPUs, ramping up. We see limited downside to forecasts for Nvidia's data center sales, I would say. Despite the fact that the company is currently selling below the trough multiple of the 2018 to 2019 down cycle, we see little downside to valuation. The correct way to look at it, in my opinion, is that you did mention 40% of overall revenues. In fact, Nvidia also reveals that around half of its data center sales are accounted for by the big cloud service providers. If you take a look at the amount of capital expenditures that the top 4 hyperscalers are expected to increase this year and next year, and you break that down, you see that between investments in AI and traditional infrastructure, well, it's true that we still need to see some revisions to what is generally expected for CapEx growth next year in order to allow Nvidia to meet expectations. But not that much, maybe 10 to 15%. On the other hand, Nvidia's stock has been more volatile during recessions as investor mood is affected by market concerns, but it's important to understand that company-specific elements like new product releases, advancements in technology, and changes in investor attitude also have an impact on Nvidia's stock price. In summary, there is a complex and convoluted interaction between Nvidia and the economy. Nvidia's success has been largely fueled by its ability to innovate and take advantage of new trends, even while economic indices clearly have an impact on the companies. If you require any other changes, please let me know.